You're probably wondering, what kind of real estate market are we in? And the short answer to that is we are in a real estate market that I would describe as bipolar. Now, the reason I say that is because there's such a massive contrast of the market depending on where you are in the United States. Today, I'm going to go over on a national level how some areas have low inventory as opposed to high inventory, major price reductions as no price reductions. But overall, we're seeing something what I would call a market reset. Some are referring it to recession, but I find that's incorrect, specifically in our market here in Northeast Florida. So whether you're a buyer or a seller, you're going to want to watch this. Let's get into it right now. Okay, so what folks refer to in the real estate market as a reset, not a recession. I go to my handy AI, and here we go. The term reset in reference is the real estate market suggests a significant adjustment or transformation rather than a widespread downturn implied by a recession. When people say the market is going into a reset instead of a recession, they often mean the following: a change in dynamics. This may include shifts in home prices, mortgage rates, buyer demand, available inventory, but not necessarily a sharp across the board decline as is seen in a recession. Market correction. Prices may stabilize or decrease after a period of rapid growth, correcting overvaluation, but underlying fundamentals like employment, broader economic health remains relatively strong. And then adaptation to new conditions. Factors like increased interest rates, changes in working habits such as remote work, evolving buyer preferences require the market to adjust or reset to its rules, expectations, and pricing. In contrast, a recession generally means prolonged period of declining economic activity, broad-based drops in home values, rising unemployment, and slowdown in buying and selling activity. Referring to the market as experiencing a reset implies optimism and that changes are necessary, adjustments leading to a long-term balance rather than a widespread crisis or prolonged negative trend. The distinction helps signal that while the market may be cooling or changing, it's not necessarily facing hardship and uncertainty of a true recession. All right, so now that we've defined reset, let's look at what the sharp contrast of how the real estate market is faring on a national level. Okay, so here we go, the tale of two markets. This is the reality of what's going on here in the United States. We have what I called a bipolar market. And I know this because I do a lot of new construction. And so folks that are relocating the area and building a home, eventually when we start to transition to when that new home is going to be ready, they're getting prepared to sell their home in whatever market they are in the United States. And I've noticed a vast difference from people from different parts of the United States can sell their home as quick as 48 hours or maybe 7 to 10 days, as opposed to other areas which are taking 30, 60, 90 days. Okay, so what does this mean? Well, since the national pandemic housing boom fizzling out in 2022, the national power dynamic has slowly been shifting from a seller's to a buyer's market. Of course, across the country, that shift is varied significantly, right? This is by Lance Lambert, co-founder of Resi Club. Okay, all right, so let's look at what we're seeing here. First of all, buyer and seller dynamics have shifted. Estimated number of buyers and sellers active in the market in general has certainly a major variance depending where you are in the United States. So as you can see here in the Northeast, specifically I'm talking about like New York, certain parts of New Jersey, you can see here that you have you have more buyers than sellers still, 88,000 as opposed to 71,000. In the Midwest, again, still pretty strong market where you still have 111,000 buyers and only 107,000 sellers. And then boom, here we go, we're lopsided in the South, including Florida, where we have only 177,000 buyers, and then of course 293,000 sellers. And then here in the west of the United States, I'm talking like Arizona specifically, we're looking at 121,000 buyers as opposed to 189,000 sellers. So more sellers in the South than the West. and then more equal, if not more, buyers in the Northeast and the Midwest, according to Redfin. All right, so basically the South and the West continue to see the greatest inventory gains and the sharpest market slowdowns, with longer time on the market and more frequent price cuts. And that's kind of what we're seeing here, and with folks that are not listing their home correctly. And of course, the Northeast and the Midwest, as you saw, remain relatively tighter by comparison, or gradually moving towards more of a buyer-friendly conditions in recent years. Okay, so again, that's by Realtor.com. Not making these up, folks. These are all quotes from the analysts out there. All right, so let's look at where housing inventory is growing the fastest compared to pre-pandemic norms. Inventory in the West and South has effectively recovered. As you can still see here, pre-pandemic levels, we saw in the Midwest and the Northeast minus 40% inventory and minus 51% inventory. Of course, now we're seeing that post-pandemic year over year, we're seeing that around 18% and 15% in the Midwest and the Northeast. And then, of course, here in the South and the West, we're seeing inventory rise up to 25% and 32% in the West. So quite a rise in inventory. As you see here from pre-pandemic levels, we were at 4.3% in the South here in Florida. Now we're at 25.4%. More so in the West now, you're seeing even a bigger, they had a little bit more inventory in the West pre-pandemic levels at 9.3%, and that has increased 32%, okay? So again, that's just giving you an idea, pre-pandemic, not a lot of inventory in the Midwest and Northeast. And people are saying, well, why is that? Well, because basically interest rates, people are locked in at these lower interest rates that we saw eons ago. People are almost forgetting about it. I wish they would, because the reality is not coming back for a very long time, those 2-3% interest rates. And so folks in those areas are not moving, because why would they? They've got an amazing interest rate, and where are they going to go? Especially if there's not a lot of new construction like Northeast Florida. All right, so let's look at what inventories changed compared to pre-pandemic ship between July 2019 and July 2025. Nationally, we're still below pre-pandemic 2019 inventory levels, minus 13.4% below July 2019. Okay, so here are the areas where we're seeing much larger inventory levels. And of course, the big states, of course, are Arizona, Texas, and Florida. Texas and Arizona being slightly worse than Florida. And then if you look up here again in the Northeast section, inventory levels still minus 37% in Massachusetts, minus 54% in Rhode Island, minus 71% in Connecticut, minus 60% in New Jersey. A lot of the areas here that I have folks moving from, they're having no problem selling their homes. New Hampshire, Vermont, those areas again in the Northeast area. Again, bipolar, because Florida, Texas, and Arizona, and my people in Arizona having a real hard time selling right now. So these numbers are, and of course that's sourced by Realtor.com. So there's fewer buyers, means less competition for home listings, and more pressure on sellers to dial back their asking price and make other concessions to help get the deal done. And that's a stark reversal from just a few years ago, when it wasn't uncommon for homeowners to receive offers well above their asking price from multiple home shoppers. Okay, now this is of course a little different in areas with lots of new construction, kind of like our area, so hold on for that thought. At the metro level, 13 of the top 50 metros now exceed their pre-pandemic inventories by 25% or more, all in the South or West regions. On the flip side, 17 of the top 50 metros still lag at least 25% below their pre-pandemic inventory norms. Okay, that is what I mean by bipolar. That's by Realtor.com. So let's see here. Where do sellers have the most power? Okay, these are rankings from 1 to 10 up here. Rochester, New York, Batavia, New York. Whoops, switched back. Forgive me, went too far here. New Philadelphia, Ohio, Alma, Michigan, Fairbanks, Arkansas, Syracuse, New York, Buffalo, New York, North Dakota, Fairmont, Ohio, Sterling, Illinois. I don't even know where these places are. Buyers have the most power. This is where, that's where sellers have the most power, mostly in New York, the Northeast. Buyers have the most power in Clewiston, Florida, Okeechobee, Florida, Shelby, North Carolina, Decatur, Indiana, Atmore, Alabama, Forest City, North Carolina, Americus, Georgia, Arcadia, Florida, Gainesville, Florida. Okay, I don't even know. These are all smaller places off the charts, if you will. But I mean, if you're a buyer and you're looking to relocate, maybe Northeast Florida isn't for you. Maybe you want to be in one of these smaller areas where there are where buyers have all the power, because where buyers have more power, there's more negotiations. All right, moving on. Home price trends vary by area. Year-over-year change in home prices in the 50 largest metros. June 24 to June 25. This is very interesting. If you look here, the markets that have lost year-over-year change in prices, decreases in prices, as you can see here in the red, this is where the decreases are below -1, -2, -3, -4% here. As you can see, Austin, Texas, and Tampa, Florida lead that pack. Miami, Florida, Dallas, Texas, Orlando, Florida, Phoenix, San Francisco, San Antonio, and there we are, Jacksonville area. Okay, so we're 1, 2, 3, 4, 5, 6, 7, 8, 9. So Jacksonville area, we're hovering about -3% in pricing decreases. That's what we've seen in change. Now, you've got to be careful here because Jacksonville is huge. It's massive. So I'm in the suburb of Jacksonville in St. Johns County, and so that may not be the case. We may not have seen those kind of price decreases. So we're very hyper-local real estate market right now. But again, we're on there. Let's look. Atlanta, Georgia, Denver, San Diego, Raleigh, Sacramento, Houston. So all these places in the red have seen a little bit of a decrease in pricing depending on where you are in those major metros. May not necessarily mean the suburb. There's exceptions to everything. And then, of course, the places where you're seeing pricing still go up here in the United States is Cleveland, Ohio, Louisville, Kentucky, Hartford, Connecticut, New York, Philadelphia, Providence, Rhode Island, Chicago, Buffalo, Milwaukee, Detroit, Cincinnati, St. Louis, Kansas City, Baltimore, Virginia Beach, Indianapolis. So the list goes on here. This is a really good graph to show you where price increases should be going up. And then here on these other metros, you're seeing prices go down. That's what I mean by bipolar market. Okay, so it really depends on who you talk to, where they're coming from. So obviously, what controls all this? Recent rate stability benefits buyers and sellers. So what we're seeing here is interest rates have not changed tremendously. We keep seeing it between 6.75, 6.5. Mortgage rates have moved within a narrow range for the past few years. Rate stability, improving inventory, slower house price growth, and encouraging a combination. Sam Qatar, chief economist, Freddie Mac. Let's keep going here. Here we go. We are looking at mortgage rates experiencing less volatility. As you can see here next to my beautiful picture face, you seeing rates here this year are basically between the 6s and the 7s, the high 6s and 7s. If you look previously from October 24, we saw rates go down September, October in the lower 6s. And again, you'll see it raise here in May of 24. So, it's really dependent. The market is very volatile based on these interest rates. So I can imagine September of 2024, October 2024, people were jumping back in the market again as rates got down to 6%. It's a big difference between 6% and 7%. But you have other options, people. Don't worry about that. I'm going to get into it in a moment here. Wait, am I skipping slides again? Here we go. Analysts, economists, and mortgage professionals are coining this quarter's activity as one of the most calm periods for mortgage rates in recent memory. Of course, you just saw that. That's by Housing Wire, that comment. You just saw that we're hovering between 6.5 and 7. And that's giving us some stability, some normalcy, apparently, unless you're in a different part of the country. All right, because higher interest rates and low inventory is a bad combination, okay? So nice, stable mortgage rates with a good 5-6 stable inventory it makes it a little easier for people because you don't have bidding wars. If you have more inventory, buyers have more choices. So borrowers should find comfort in the stability of the mortgage rates, which only been fluctuated with a narrow 15 basis point range since mid-April. Although recent data show that home sales remain low, the resulting available inventory provides home buyers with a wider range of options to consider when entering the market. Again, that's Freddie Mac, chief economist. That depends on where you are, of course, here in the United States, okay? All right, buyer and seller dynamics have shifted. Estimated number of buyers and sellers in the active in the market. As you can see here, as we get into 2021, let's see, this is sourced by Redfin. We're looking at the buyers in the market in 2021 were really high, and then here in the green, they were the sellers are really low. So not very good. Okay, you kind of want these lines to be slightly together. Here we are in 2025 now. We're seeing more sellers in the market in 2025. We've got 1,943,000 sellers as opposed to 1,453,000 buyers. Okay, so these lines, it would be nice if they were close together. It would be easier, but here we are now. We're getting heavier on the seller side and a little lower on the buyer side. And then again, it all depends on inventory and interest rates. And this is sourced by Redfin. Okay, let's keep going. All right, so buyer demand is slightly up this year compared to 2024. And that I can attest to that too. We certainly have a lot of buyers dipping their toes in the water depending on where the interest rates are and how they can buy rates down. And I'll get into that in just a moment. But here you go, 2025. We're in July right now, and compared to 2024, we certainly have more buyer demand, but it is going down. As you can see, in July it peaked, but it is now going down here in August, which is normal for this time of year. But we'll see what happens with interest rates. That's going to affect everything. There's no rhyme or reason to anything anymore. We used to say, oh, everybody's buying in a certain time, springtime, but it's really dependent on rates and the deals that can be had. All right, I expect a generally downward trend for rates this year, but a slow enough pace that it might not be noticeable at any given month. That's by ChiefEconomistRealtor.com. So they're saying, hey, if rates continue to stay steady, we will see a downward trend, slow enough pace that it might not be noticeable in a given month. We'll see about that. I still see it zigzagging a little bit. I'd like to see a little bit more stability. This is where mortgage rates projections go as of end of July. They're expecting rates to see, let's see, the actual rate's 6.8 as the time of filming, or at the time of this creation, July 31st. But we're seeing rates go down a little bit, and Fannie Mae is forecasting as low as 6%. You know, if rates go down to 6%, from 6.8 down to 6%, that's going to make a big difference, and it's a heck of a lot of buyers are going to jump in the market, especially with new construction incentives. So even incremental, small changes in mortgage rates, I think will bring in more buyers. I agree, by chief economist of the National Association of Realtors, absolutely. Slightly lower mortgage rates toward the end of the year could further improve affordability, but significant improvements appear unlikely. That's Zillow Home Loans. We don't really know. Everybody's speculating on interest rates. The job market report was not as good as we thought it would be. So would interest rates go down to 6%, like Fannie Mae says? I don't know. Let's hope so, though. And let's see what this big difference is. You know, we're looking at a home loan amount of $400,000. If rates at 7%, it would be $2,661. At 6.5%, it would be $25, $28, which is about $132 cheaper a month. So can make a big difference. Those rates make a big difference. And then if you buy down the rate with the builder incentives, even better. You'll get into the fives like some of my people have been doing with certain builders. But you have to be careful. Don't jump into that game unless you know what you're dealing with as far as the builder. Trying to time mortgage rates is really difficult. There's no guarantee the rates are going to be any more favorable in 3 months or 6 months. Please don't listen to people that say, I'm not even going to say it. I don't even want to say it, because the reality is that you don't know where rates are going to be, so you can't date the rate and marry the house or whatever realtors you've heard say that silly saying. But let's continue on here. I digress. For potential home buyers, it's important to get quotes from multiple lenders for a mortgage, and rates can vary dramatically. Okay, this is especially important if you're dealing with a new construction and they have preferred lenders. You really need to compare rates. I've had to tell people in the last week, get a loan estimate worksheet from every lender, at least 2 or 3, so that we can compare those numbers side to side, especially if they're offering incentives, because you just don't know where they could be charging you more. One lender could give you a higher interest rate and lower closing costs with the incentive of the builder, and then they can make it up with a higher interest rate, or one can give you a lower interest rate and higher closing costs. You have to have a real estate professional, someone who has a team of people and lenders that they work with all the time that you can trust, that's going to get you the right deal for you, depending how long you're going to be in the house, depending if you're getting a new construction loan or you're doing a resale. Super important to really have a real estate professional to guide you through this process so you're making the right decisions. Don't just go with the first realtor, the first lender. You should be interviewing multiple realtors, asking how many homes did you sell last year? It was a down year, but the rock star agents okay, let me be humble, but you should be asking those questions and also working with the proper lender that you can trust. Home prices appreciation will be tepid. This is what's happening in the future, with many markets seeing little or no change in prices, but rising inventory in some formerly hot real estate markets, aka Florida, Texas, Arizona. Will be shifting from a seller's market to a buyer's market, and will be susceptible to price declines. Chief financial analyst Bankrate. All right, let's keep going. All right, home prices forecast for 2025. We're looking at an average of all 8, I think is important. Zillow and Redfin saying -1%, -1.4%. National Association and Wells Fargo are saying 2.3 to 3%, 2.6 to 3%. And then, of course, the average of all 8, we're saying home prices are going to increase about 1.9% annually this year. I find it interesting that Redfin and Zillow are -1% and 1.4%. I'm wondering why they see it that way. All right, the vibes for home prices are growing much more bearish for the rest of 2025. We can see inventory levels, especially in the Sun Belt, aka Florida, are now sufficient to put downward pressure on home prices. This seems likely to continue and spread to more states. However, there isn't much data that shows significant price declines. And again, it's really that bipolar market we're talking about. All right. Home price forecasts are trending down from 2024 versus current forecast. Original forecast, Fannie Mae said 3.6%. Now current forecasts are 4.1%. And the average of all 8 is 1.9%. So 2025 home price forecasts are trending down. So I'm going to agree with that probably as well. I think 1.9%, an average of all 8 from the original 3.1. I think we're heading in that direction, but again, interest rates could change that. Looking ahead through the rest of the year into 2026, we don't expect mortgage rates to come down much, at least not through the third quarter of 2025. So affordability will remain pressured, okay? That means if we have low inventory, higher prices, unless you have new construction area like we do in Northeast Florida, and not like South Florida, we also have fantastic home insurance rates compared to South Florida, so which makes our area in Jacksonville, Northeast Florida, better, if I dare may say so myself. All right. Sales remain low but slightly up from last year. Existing home sale forecast as of July 2nd, 2025, from 2024 to July 2025, forecast is 4.3 million, 4.2 million, 4.1 million, 4.1 million, 4.1 million. Okay, so slightly up from 4 million in 2024. So that's a good sign that we're heading in the right direction. Okay, are you still with me? This is important, folks. This is the good part here. And don't worry, I'll summarize this really quickly here at the end. That will make it all encompassing and understanding. So you see here, newly built home sales remain largely unchanged. So in 2025, new home sales forecast as of July 2nd, 2025, and we're in August currently right now. As you can see here, new home sales were at 686,000 in 2024. The National Association Realtors saying 755. Wells Fargo saying 705 and Fannie Mae saying 677. So that's why they're saying that's largely unchanged. Again, a good sign. We're not seeing a major decrease yet. And I say that because they are saying, the Census Bureau is saying fewer newly built homes will be coming to the market. Seasonally adjusted annual rate of new home starts. Now, new home starts is just a terminology of when they break ground for new construction, whether it's residential, commercial, multifamily, whatever it is. And as you can see here, we see a lot of new construction starts in February of 2025. It drastically drops in March of 2025, comes back up a little bit in April, and here we are in May 2025. It drops again. So is that the builders' confidence levels going down? Does that mean they're sitting on more inventory? I don't know, but I see something interesting in the market, and hold tight. Shoppers in the market for a new home will still have options in many markets and are likely to be in a good place to negotiate, but builders are already adjusting their outlooks and slowing the development pipeline, which could mean that new homes are harder to come by in the next year. Chief economist at Realtor.com, Daniel Hale. That's an interesting thing to me. I really hope that doesn't happen. I don't see that happening in Northeast Florida. Now, we're talking on a national level, and certainly some areas are hurting more than others. I know that national builders are trying to make up for their sales in the rest of the country with their sales here in Florida. So that gives me great confidence about the Florida market. But we do not really want builders to slow down because, as I said, we're not in a recession. We're in a reset. And so we are just now becoming a balanced market where pricing is starting to come down to earth. We just need interest rates to go down a little bit together, and we could have sellers and buyers in equal amount rather than too many sellers. If we just get that balanced market, it'd be good. If we don't have much inventory and the builders stop building, then that could be a problem. We could be in a shortage, housing shortage. And again, low inventory is going to raise pricing. But for now, I want you to realize that you should be looking at new construction right now, specifically in Northeast Florida, and other markets are pretty hot for new construction. I know Houston, for instance, is a good hot market for new construction, specifically first-time home buyers, because builders are offering massive incentives. But be cautious. If it's too good to be true, be careful, because it depends on the grade of the builder, and I don't want you to regret it later on because it's going to cost you more money in the future. Sure, they'll pay your closing costs. Sure, they'll buy down your rate to 5.5%, 30 years. Sure, they'll do all this for you, as well as putting in a fence, a lanai, or whatever it is. But is a quality build going to be good, or are you going to be, out of luck once your 1 year bumper to bumper warranty is out because the build quality was so bad? So here we go. New build home inventory continues to rise. Supply seasonally adjusted. Again, we're looking here now in 2025. We had 9 months. 9.3 months, 9.2, 8.3, and now we're seeing in May of 2025 up to 9.8 months, and that's on a national level. So again, more inventory with new construction. That's what makes it a good time to buy. So if you're understanding this yet, if you understand the bipolar market and how that can be an advantage for you, if you're in one of those Northeast places where you're still selling in 48 hours or 7 days at top dollar, and you're thinking about relocating to Florida, and home insurance rates in Northeast Florida are low, we have lots of new construction inventory. With the right guidance, you can find a very good deal with some very good incentives right now. So you get to take advantage of a seller's market and buy into a buyer's market. That's the plan of action, and it's all about the timing. So right now we're seeing inventory in May of 2025, new construction up, and that's where the opportunity lies. 50% of the new home communities in May offered incentives on to-be-built homes and 75% on quick move-in supply. Again, I always tell folks that the deal is always better when the home is a quick move-in home is done. If it's staged by the builder, that means it's time to negotiate. And of course, it helps when you have an experienced agent like myself to guide you. It's at no cost to you to get ahead of the curve, get yourself a really good deal. But realize quick move-in homes are not always on the best lots, and it's all about location. It's really about how long you plan to be in that neighborhood, and it's also about how many homes are going to be in the pipeline if it's a master plan community. So you need to be advised by a real estate professional. I can't stress that enough. It costs you no money to do so. Why would you go in on alone? All right. New home buyers are getting increasingly large mortgage rate discounts, average 30-year mortgage rates by home type. Again, existing homes, you're looking at 6.5%. And then we're seeing here in 2024, folks that are buying new construction are closer to 6%, 6.2%. Believe it or not, I've had certain customers that have locked in on 30-year rates as low as 5.6% as of recently. Yes, that is very accurate. Builders are buying down the rate 30-year, and that is not chump change, to 5.5%, which makes it more affordable for people to get into new construction. So that's why we're seeing some first-time home buyers get in the market. It's just you got to be careful on the grade of the builder that you're going with, and making sure that you have a good real estate advocate and advisor to guide you through that to get yourself a deal without catching yourself in hot water with a really bad build in a really bad neighborhood that you're going to regret later on. It's kind of like dangling a carrot in front of you, and you bite on the wrong carrot. So that's Realtor.com. The main reason mortgage rates are lower for new homes is that builders are offering below market rates to buyers as an incentive to close the deal, primarily through mortgage rate buydowns. Yep, it's definitely happening. Be careful with those 2-1 or 3-1, 3-2-1 buydowns, because people that got involved in those 2 years ago, those rates are going to come back up to what current rates are. It's going to really hurt some people, and it already has. I'm starting to see a little bit of that in the market where rates jumped up. They were hoping to refinance, and it's not happening yet. More and more builders are cutting prices. Here's the percent of builders cutting prices across the U.S. As in April 2025 is 29%. May 25, 34%, and June 25, 37%. That's from the National Home Builders Association. And that is that. Let's talk about the local market. All right, here we are. We are now in the local market. We are in St. Johns County, which is a suburb of Jacksonville, and it goes down into St. Augustine. So nothing better than getting weekly trends from Real MLS, because that really shows you what the market's been doing since 2024, August to August 16th of 2025. And as you can see, folks, last year was supposed to be a down year for most of the year until it picked up around October, November of 2024, because we saw interest rates drop down in the lower 6%. Then it went down, and then it picked up in December, down again in January. But as you can see, it's been a complete zigzag this year here in St. Johns County, as far as median sales price going up, down, zigzagging all the way through here through
August 16th. So we're in the 575 range in August. Here is the median sale price in St. Johns County. Prior week it was 554, and same time last year was 567. So again, a lot of zigzagging, but still ending up in stable places. Nothing drastic that indicates a recession, right? So let's look at closed sales from last year. We saw August was a peak with 157. Let's see, what filter do I have on here? So I have all of St. Johns County on here, single family residences only. Again, August 17th of last year, we were at about 157. This year at 816, we're down to 64. So definitely lower, but staying above the 60 range, hitting that line and going back up and continuing to do so. So we're not back down. It's start of the school year. This is really the best time for buyers for sure, as always after the school year starts, and then certainly during the holidays is a great time to be a buyer because nobody's really buying homes during Thanksgiving. So as you see, a 39% decrease from last year this time. Closings are down. Let's go ahead, but we were at 101. I think we peaked at the beginning of July this summer, and then right around after July 7th, our sales slowed down, and I can recollect from that, from my listings that I had, and all the buyers that I represented. So, yeah, so that's an indicator on the weekly trends. Closed sales are zigzagging up and down throughout the year, hitting a low right now. Median sale price is still in the 560 to 575 range. Again, going back and forth, zigzagging, which again is no indicator of a recession at all, just a reset. And if interest rates do decide to go down a little bit, that will definitely jump up again. All right, so what else can we find out here? Percent of list price received. We'll throw that in there to see what happens. This is all of St. Johns County, and we're saying 96%, which is, I would say that is pretty good. So again, people are calling on where are the deals at, and you have to be able to find them, look for them, put lots of offers in. It is just not that easy, folks. It's not just a, hey, let me just go write a lowball offer and it will get accepted. Sellers are not necessarily having to sell or willing to sell. And let's talk about that for a minute. Who's moving here and who's selling? And it's the standard stuff that I'm seeing. I'm seeing divorces where people have to sell. I'm seeing people downsizing. I'm seeing some people that lost their jobs and maybe got a new job but not the same pay rate. We're seeing a lot of people relocating here for jobs. I'm seeing people relocate here for retirement. So it's a combination of everything. Life happens, and this area is still popular because of our home insurance rates being the most affordable in the state of Florida, and then also having all the new construction and inventory certainly makes that makes us an interesting place to live. And then of course people who live in Florida that like change of seasons pick this area more so. They don't want the dramatic change from the Northeast. They want a little bit of change of seasons. So that's another reason why they moved to this area. But Jacksonville is booming as a city in general. Market insights. Let's go ahead and look at the market insights. We're talking about sold price per square foot. As you can see here, we're at the peak of January 2023 at $288 a square foot. And right now, again, not a massive drastic change here in St. Johns County. We're looking at $268 a square foot. And that is St. Johns County single family homes that I did there. So again, nothing is indicating anything dramatic. If you see here from January 2021, our sold price per square foot shot up from $178 a square foot in 2020, December 2020, all the way to 288 in 2023. So that had a lot to do with the pandemic, and it's coming down a little bit, but nothing drastic at all, if you notice from these graphs here. So here we go. Let's go look at closed sales. It's always fun to look at. So again, we peaked in January 2021 or December of 20, had 1,345 closed sales. It dropped in January of 2023, picked up a little bit January 2024, and again, picking up a little tad bit in 2025. Again, just like the national market indicated, we had a slight uptick from 2024 to 2025, but here we are expecting, a drop in December of 2025, and again, that could be affected depending on interest rates, but that's dropped because we're not in December of 2025. So we'll see here, January 2025, and then the drop. We've been going down as of December. So yeah, we're seeing it going down, but we don't really have the full stats yet. We did that, sold price per square foot, averaging around 268 median sold price. So, all right, what else do we have here? This is an interesting graph too. This is basically a graph showing canceled, expired, and withdrawn listings in Nocatee. I decided just to throw that in there for the heck of it. So you can see in this graph here, since the last 3 months, which would be June, July, and August, or maybe a little bit May, June, July, we're looking at about 65 listings in the Nocatee area that either canceled, expired, or withdrew their listing because they weren't selling or they were just overpriced. People were expecting pricing that is no longer valid for this current market with the current interest rate. So median sold close price is at $750,000. Let's go ahead and see how many closed in Nocatee in that 3-month span. This is the last 3 months to date. Go ahead and take a look at that. We have 239 listings that close, and as you can see, these are all the price points. So certainly a lot in this quadrant here, which shows between the upper 200s to just below 300 square feet. And then look here, these are all the higher priced homes still scattered here. So we still have a lot of activity in closings. Let's go ahead and see. Pending in the last 3 months. So let's see what's pending. And this sometimes can be a little confusing because builders will have pendings for new construction, and sometimes they will not be reported if it's a pre-sale. So we've got 88 listings that are pending right now in the Nocatee area. So we're still in a pretty healthy market. A good indicators that things are kind of on reset, like I said. And these are the market insights to show you that we have nothing drastic happening like we did in January 2021 pre-pandemic to 23. So nothing drastic, just a correction and a regular reset of the market.
All right, folks, that's a wrap. Of course, just a little recap. We are in a bipolar market. We are not going into a recession. It is called a reset. But if you are in one of those areas in this bipolar market where it's still a seller's market, and we here in Northeast Florida are an officially a buyer's market, then you can take advantage of it right now, as well as Northeast Florida being a massive place with major incentives for new construction.
Also, fantastic home insurance rates for Florida. This could be an opportunity for you. So if you're thinking about relocating the area, make sure you call me, text me, or email me. My information will be pinned to the comments as well as in the description, especially if you're considering new construction. We will advocate on your behalf at no cost to you. And of course, you will have the ability to take advantage of those inspections as part of our services, as well as someone to help you with that design center process. So certainly some opportunities for you there. And if you're thinking about listing your home, again, we're not looking for those people that are just testing the market out. We want you to call if you have one of those situations where you need to sell, because obviously it's a buyer's market, and we will give you a true, honest evaluation of what your home is really worth in this market and what the marketing plan is going to take to sell it in these conditions. And I tell you what, the stats are saying a lot of people are become involuntary landlords because they know if now is not the right time to sell, it might be good to be able to simultaneously list it for rent as well, and see where these interest rates take us. Because if they do lower, we have a lot of pent-up demand, and I can tell you that the house will certainly sell better in a better market. So again, my name is Greg DeTullio. I have a couple more videos here that you can watch with an overview of Jacksonville, my favorite suburbs, as well as a 10-minute overview of St. John's. So check out those videos, and I'll see you there.